Today's highlights: retail investors panic sell, $3.2 billion in stablecoins flow out, and 78-ounce 500 BTC have been added since. Signs of a rebound are emerging. On the eve of new MiCA rules, a major incident occurs. The fine on Coinbase warns the industry. ETFs continue to see outflows. The price of crypto has dropped by 11%. Has Bitcoin really hit bottom? Today is Friday, October 7th. This is the TV Chinese Channel B, co-hosted by me, Dong Dong. First, let's look at the 24-hour crypto news headlines, sponsored by NEXO. NEXO is a licensed exchange in Australia and is now entering the Asian market. They've given the green light to users in the Chinese-speaking community, waiving many of the complicated KYC procedures. Plus, the assets you hold on NEXO can be staked, borrowed against, or spent, allowing your crypto assets to grow continuously, safely, and efficiently. Scan the QR code on the screen to get a permanent discount on transaction fees. And after the sponsorship period ends, we'll hold a lottery together with NEXO, where you can win prizes ranging from USDT, Bitcoin, and Ethereum to channel merchandise. Bitcoin has taken quite a hard hit this time, but the real big players aren't panicking at all. The data makes it clear. Those wallets belonging to permanent holders are getting fuller and fuller. The average cost for institutional funds and whales has already risen to $78,500. Not only have they not left, they're actually increasing their positions at these high levels. To put it simply, short-term traders are dumping, while long-term players are accumulating. As long as the price stays above $78,500, this so-called crypto winter is just dark clouds. The real blizzard hasn't started. What's making the market nervous now are macro issues: the US government shutdown, stock market instability, and in South Korea, wild arbitrage trades. But if you look at it from another angle, expectations for interest rate cuts are heating up, quantitative tightening is almost over, and EM2 liquidity is recovering. All of these are like a countdown to a rebound. Once the wind shifts, we might see another wave of new market action. After all, in the crypto world, it's always the retail investors who panic, while the whales remain calm. The recent on-chain data is quite interesting. Those short-term holders who were constantly trading over the past 90 days have finally quieted down. Only 32,100 bitcoins have flowed into exchanges in the short term, while the total inflow is 34,900. A difference. What does this tell us? It shows that the selling pressure is almost exhausted. In the past, the first to sell was considered smart, but now, the first to move is seen as foolish. The market has shifted from panic selling to calm observation. At the moment, Bitcoin is still stuck around 102,000, with a strong resistance at 112,000 above. If it wants to break through again, it depends on two groups. Short-term traders need to avoid impulsive buying, and long-term capital. They remain steady. As long as those long-term whale holders don't let go, things will stay stable. The market bottom might be coming soon. To put it simply, stablecoins are like the emotional sensors of the crypto world. They panic at the slightest breeze and react first to any news, but their quick moves are also shaky. The ones who truly set the direction are always those long-term funds that can sit tight. Short-term players just watch the excitement, while long-term holders shape the bigger picture. That's the unchanging truth of the crypto world. Recently, stablecoins have clearly been taking a breather. Data shows that since the peak of $308.4 billion on October 22nd, it has slipped down to the current $305.5 billion, evaporating $3.2 billion in just 2 weeks. That's almost 300 million lost every day. The market is starting to become cautious, and the activity of funds is visibly cooling down. USDT is still the big brother, firmly holding its 60% throne, while USDC and DAI have shrunk slightly. This shows that both institutions and DeFi are temporarily holding back and watching from the sidelines. But there's something interesting: USDE and USDS. On the contrary, they've actually risen against the trend. It seems that smart money is already looking for new high-yield safe havens. On the macro level, the US government is still shut down. The stock market is at a precarious high, and there's not much risk appetite in Asian markets either. Sounds pretty dull, right? But actually, it's often during these quietest times that the market is preparing for something big. Every time stablecoins flow out and sentiment hits rock bottom, usually a rebound is just one breath away. Coinbase has always been the compliance model student in the crypto world, making sure to get all the necessary licenses wherever they go. In 2018, they saw the geographic advantages of Ireland within the EU and quickly set up shop in Dublin. In 2019, they secured an electronic money license, and by 2022, they obtained VASP registration, fully launching trading and custody services. Back then, everyone praised them for being as steady as a central bank. But what no one expected was that this top student, who always boasted about being invincible in compliance, was recently singled out and criticized by an Irish bank. The reason? A system coding error, which directly resulted in a fine of 21.5 million euros. The crypto community was thrilled. If even the model student can mess up, what do ordinary students have to fear? It really proves the saying, the harder you try to be a role model, the harder you fall.
This incident dates back to 2021 and 2022, when Coinbase's European branch had problems with its transaction monitoring system, beyond technical errors. Of 21 monitoring scenarios, 5 had 3 coding mistakes, causing wallet addresses with special characters to go unrecognized. As a result, over $202 billion in transactions escaped suspicious activity monitoring, making up 31% of their European business.
So we need to have a clear path for people to register. For crypto securities, there are disclosures to sort out, and you have to figure out how to ensure that these are accredited investors when necessary. So together with the rest of the crypto industry, we are working on ways to achieve this.
Coinbase conducted a self-inspection, found and fixed the problem in a few weeks, reviewed 185,000 transactions, and submitted 2,700 suspicious activity reports, involving a total of $15 million. Although there was no illegal activity, the Central Bank of Ireland still imposed a hefty fine based on Coinbase's annual revenue of 480 million euros.
This incident with Coinbase is really like a top student failing in public. The fine is just on the surface, but what really hurts is that their reputation as a compliance model student has been shattered. Next, with the new EU MiCA regulations about to take effect, if they want to keep operating in Europe, they'll have to invest even more to upgrade their systems, strengthen risk controls, and improve their internal capabilities. For the entire crypto industry, this isn't just a minor episode, it's a wake-up call for the final exam. Licenses are just the entry ticket. Technology and risk control are the real strengths. Even a single parameter error in the anti-money laundering system can turn into a multi-million-dollar pitfall. As for the Irish regulators, this time they've made it clear. Don't use technical issues as an excuse. If you fail the compliance test, you'll have to pay the price. Recently, Bitcoin has really tested everyone's patience. After that big crash in October, it hasn't managed to climb back up, and now even the support line has been trampled flat like a carpet. Right now, it's hovering around the $100,000 mark, which is 11% lower than the peak of $112,500. The entire crypto market has been dragged down with it, and the total market cap has dropped to $3.44 trillion, hitting a 4-month low. The external environment isn't helping either. There's the US government shutdown, the CPI is about to be released, and liquidity is still tightening. Market sentiment is hard to describe. But you know, the bottom is never a single point. It's always a tangled zone. At this point, anyone daring to enter the market is definitely not just a gambler. They're actually the most visionary and patient ones. After all, the less people dare to buy, the closer we usually are to a rebound.
In the past 30 days, long-term holders with addresses holding BTC for over 155 days have sold about 405,000 bitcoins, making up 2% of the circulating supply. At an average price of $105,000, this is over $42 billion cashed out. Look-on-chain data shows the main selling pressure is from mid-sized wallets with 10 to 1,000 bitcoins. These investors, who built positions 6 months to a year ago, are now sitting on about 150% profit on paper and are cashing out together. Meanwhile, whales holding over 1,000 bitcoins are still making small increases to their holdings, indicating that top-tier capital remains bullish. The current decline is more of a structural correction triggered by mid-size holders taking profits.
Recently, the US Bitcoin ETFs have lost their momentum. Just 2 weeks ago, things were bustling with excitement, but now every day sees net outflows bleeding between $150 million and $700 million. Think back to September and October. When institutions made a move, it was like mountains of gold and silver pouring in. Now it's all about locking up positions for risk aversion and cashing out profits, while those who aren't interested just keep waiting on the sidelines. As a result, with buying interest cooling off, the price of Bitcoin has naturally slumped as well. The whole market feels like it's hanging in midair. Not exactly crashing, but lacking any real energy. In short, the current situation is like a compressed spring. It needs new capital to push it up, and just one wave of panic could send it down. So whether it rebounds or drops further depends on who breaks this deadlock first.
Here there are legends of getting rich overnight as well as carefully crafted scams. This is a dark forest growing in chaos, but it also nurtures a land of hope leading to the light. The destination of faith is freedom, and the endpoint of consensus is equality. BitcoinTV, guiding you through the fog, seeing the future, and getting richer together, step by step.
Produced by BitcoinTV and exclusively sponsored by Get.io, the first Mandarin Web3 talk show, Secret Talks Hong Kong, will premiere tomorrow night at 8 p.m., unveiling the perseverance and growth of Hong Kong's crypto community. Even before going public, Zhengmai's stocks are already making huge profits. Good news today? Robinhood's crypto business reported a 300% increase in its interim report. Also, the talk show, exclusively sponsored by Get.io and produced by BTV, has finally launched. This is the very first show that can explain Web3 clearly without putting people to sleep. The host, Michael, is our BTV lead. He's a powerhouse who has straddled two eras. After more than a decade in traditional media, he jumped into the blockchain world early on. With this background, he's especially skilled at explaining technical concepts in plain language. Even though the show is called Secret Talk, there's nothing mysterious about it. What we discuss isn't about getting rich quick by speculating on coins. Instead, we talk about why blockchain was created and the logic behind it. With Get.io's full support, the show is packed with industry insights and future philosophy. No pretense, no hype, no empty boasting. Secret Talk is the kind of show that makes you nod along as you watch, helping you truly understand the crypto world and see the future clearly.
The first season of Secret Talk, the Hong Kong season, focuses on Hong Kong's Web3 stories. The show is recorded in Hong Kong, and aside from the host, Michael, the founder of BitcoinTV, all the guests are prominent local figures in Hong Kong's crypto scene. Kevin Madeira, Chief Business Officer of Get.io, Chief Executive Officer Jessica Young, Meme Strategy's Chief Financial Officer Tony Liu, these four Web3 elites from Hong Kong come together to discuss the decision-making logic amid market volatility. Their ways of thinking and their paths also reflect Hong Kong's unique voice in the global crypto industry.
Through this show, we want everyone to know that in crypto, there are people with great looks, fitness enthusiasts, traders, and those dedicated to media. Many are steadily building the foundational infrastructure step by step. We hope that when you enter this space, you can see a bright future ahead.
Additionally, Crypto Talk Hong Kong season is split into 6 chapters: Bitcoin, Web3, compliance, security, exchanges, and the crypto world. These themes form the core of the crypto universe. They also represent the ways in which technology, finance, and trust systems are being restructured in this era. The show will premiere simultaneously at 8 p.m. Beijing time tomorrow on BitcoinTV's official YouTube, Weibo, WeChat public account, X, and other platforms. 3 representative guests each address real-world pain points from their own perspectives.
In 2018, Bitcoin actually reached a small peak. As we continued to hold on to it, we noticed a very promising trend. So while I was receiving some Bitcoin as rewards, I also started buying some myself.
In 2018, Bitcoin was at 20,000 yuan, and that just happened to be when I got married. At that time, I started paying more attention to this B option, and that was also when Ethereum had just come out, so I began trading on my own. So yeah, I saved up Bitcoin and got myself a wife. I got into the market in 2021 when it was around 69,000 or over 60,000 anyway. My friend said this industry was really hot and that I should buy at least a little. Then it started to drop, so I bought a bit more as it fell and kept buying all the way down to about 25,000, but after that I didn't dare to buy anymore.
The Web3 content community has finally started to break out of its bubble. In the past, everyone was just hyping themselves up, but now people are actually willing to talk about technology in plain language. What we do at Logic Secret Talk is to make blockchain less aloof and more accessible, so that ordinary people like us can also understand what's going on in the crypto world. We want to tell everyone that crypto isn't just a gambling table, and Bitcoin isn't just a tool for fleecing newcomers. It's more like reshaping a system of trust. If we don't speak up, the future will always be defined by noise and jokes. That's why we're stepping forward, not to chase trends, but to prove a point. The crypto world can also be sincere, and technology deserves to be taken seriously. Robinhood is really going all out this time. They just secured an EU regulatory license, then immediately acquired Bitstamp, and even launched tokenized stock trading. Even unlisted companies like OpenAI and SpaceX have been brought on-chain by them. So what happened? OpenAI immediately spoke out, saying they have no partnership and to stop riding their coattails, but Robinhood wasn't fazed at all. On one hand, they're working on prediction markets, and on the other, they're opening up to Ethereum. Selena's staking service is also preparing to let European users play with triple leverage crypto contracts. Their ambition is truly off the charts. But the most outrageous part is that their third quarter financial report was explosive, with both revenue and profit soaring. proving that old saying, when others panic, they're making a fortune. This influencer brokerage really knows how to play the game.
Robinhood's third quarter financial report was impressive, with revenue reaching $1.27 billion and net profit at $556 million, both exceeding expectations. Earnings per share were 61 cents, a significant increase from 17 cents in the same period last year. Monthly active users rose to 13.8 million, with the core driver being the recovery of trading business. Related revenue doubled year-on-year to $730 million. Among them, stock and options trading grew by 132% and 50% respectively. Crypto trading revenue soared by 300% to $268 million, slightly below analysts' expectations.
Innovation like this really has the active trader engine humming. In quarter three, we had record equity and option trading volumes, and October looks even better.
This time, it's not just about adding new features. It's about rewriting the financial playbook. They've turned prediction markets into a social finance laboratory. It allows users' emotions and opinions to be put on chain as data, turning them into new fuel for wealth. The current Robinhood isn't just helping people trade crypto, it's collecting beliefs. Every time you place a bet, every prediction you make, it becomes nourishment for their algorithms. Looking at their moves, prediction markets, sealed entry points, mortgage channels, closed-end funds, this isn't a brokerage. It's a financial supermarket for retail investors. But with lower barriers, the risks also increase. Robinhood isn't just competing in business, it's competing for the future landscape of finance.
Elon Musk has made another big move. At Tesla's shareholder meeting, he said the company might have to build its own superfactory capable of producing 1 million AI chips per month, dedicated solely to AI chips. Even more explosive, he mentioned the possibility of partnering with Intel. It seems Tesla doesn't just want to make cars and robots, they're planning to build the brains behind the intelligence themselves. Even the old-school Jamie Dimon has come around. JP Morgan Chase CEO Jamie Dimon said that instead of watching others make money, it's better to get in the game and issue their own stablecoin. Looks like Wall Street has realized that if they keep rejecting crypto, their rice bowl will be taken away. Galaxy Research poured some cold water on things, saying that 72 out of the top 100 big players are already about to be cut. In other words, most projects are still struggling halfway up the mountain. There's still a long climb before we get back to the peak. Weather Labs is at it again, this time with something cultural. They invested in a digital heritage platform called Finish. It's not about NFTs, but about using AI to revive culture, aiming to create 3D archives of buildings, cities, and even history to preserve them for the future. Holy Market is about to go mainstream. In the future, when you search for news on Google, you won't just see gossip, you'll also see the odds. The rumors people talk about online are about to get data-backed. Now, even gossiping will have to be scientific.
Today's Daily Soup. You may have the manners not to hurt others, but you also need the presence not to be hurt by others. If no one is there to protect you, then let your kindness carry a bit of an edge. This world is no fairy tale. If you're too gentle, you'll get bullied. If you're too kind, you'll get stepped on. Kindness doesn't mean standing still and taking the hits. It means embracing life while wearing your armor. And don't be afraid if people say you've changed. We're just learning to set boundaries and have principles, and that's what real growth is. The human heart can be treacherous, and the road ahead is long. You must learn to stand firm in the wind. Kindness is a virtue, but sharpness is our shield. If you get this, please like us. That's all for today. Our channel shares valuable news summaries in crypto, blockchain, and mining. We offer updates and in-depth reports. If you find us valuable, share and follow, or become a member. Members get exclusive wealth codes Monday to Friday. Let's grow our assets together in the bull market.